We'll take an outside perspective look at what has happened over the past few years in terms of venture funding, obviously, the ups and downs around that, um, partnerships, M&A activity, and all that. So we'll jump in there. I've known John, I think, for at least 5 years now, and it's great to keep in touch with the kind of the community, not just in SaaS and tech, but obviously in MedTech here. I was excited when he sent over the invite over Slack of like, hey, can I join? So I'm like, yeah, of course. I'd love to. And it's great to be talking to folks outside of biopharma, which I spend probably 95% of my time on calls with biopharma companies, therapeutics, drug discovery companies, investment banks around that part of the industry and all that. But in medtech, it's a really good interface of software and info, which is really what we do, and applying that to humans, right? And to medical technologies and especially diagnostics and medical devices directly. Okay. So we track all that in our database. I'll tell you more about it here in a second. I'll be talking to you guys today from using data from the DealForma database. Okay. I founded DealForma in 2017, and this was after about 15 years or so working in management consulting and other data shops basically around life sciences. Prior to that, I was a scientific researcher at the University of California in San Francisco. What I had seen over the years is that there was initially this firewall between academia and industry. And around that time, around 2003, 2005, is when more and more academic labs started working with biotech companies and pharmaceutical companies in research partnerships. And then those kind of advanced further and further along. And nowadays, it's almost a very smooth transition. So having seen the business side of things early on, I decided to start, I joined a firm that tracked all that and helped companies to form license partnerships with pharma companies. So we tracked all those licenses. We read a lot of contracts. Small ones start out as 20-page documents and legalese, and those have grown to 200 and 300-page documents with multiple different attachments, obviously. So started out tracking the deals between companies, and over the years expanded that to tracking not just the partnerships, but acquisitions of companies, venture funding, product pipelines, especially on the therapeutic side, and further on to what the intent of companies are as well. So we now have the DealForma database. This is one of a few that are out there. We didn't reinvent something, but we'd like to think, and we hear from clients that we've done a better job, especially in the specific areas that we focus on. The database, we initially started filling it up in 2017, and I wanted 10 years of data in there to go back. So we went back to 2008. Company by company, year by year, we scanned and searched for all the press releases and investor reports, company presentations, SEC filings to gather all the data and source documents for all these partnerships that are formed. Now we're at 39,000 deals covered. Those have all been manually curated into the database. Our team of 16 people on a full-time basis will go through here and create profiles on a daily basis and quality check all those. So we really push data quality, the usability of the data. So you're going to really get a good feel for the filters that you're using so that you get a really good picture of benchmarks, deal comps, investor due diligence or company due diligence if you want to see what other companies are they invested in. Similar to others that are out there, and some that have been mentioned, PitchBook and S&P Cap IQ for broader industries. And we niche down really on biopharma and MedTech and HealthTech especially. Okay. So apart from deals, we track funding rounds themselves, 40,000 companies and investors and all the ecosystem around that. We track drug sales figures, product sales figures, and just product pipelines. Okay. So going through here, things I'm going to talk about today. So we're going to compress this down. It's part of a larger presentation that I give every quarter. Here, we're going to be focusing on healthcare and life sciences venture activity to start out. There is some good news there. We're going to look at contracts and licensing activity in MedTech in particular. We'll focus on what therapy areas have been very active, both of those in terms of upfront cash. We'll look at M&A activity to close it out, like an exit, basically. And then a bit of an outlook for the rest of 2025. But again, big grain of salt. You never know how it's going to play out. Every week, it's a little bit different, right? So getting in here. So in preparing the slides for this one, I said, okay, I want to start with something good, right? I mean, ever since 2021, 22, we have seen venture come way down. It was coming down from a very high point. I could say that. But as Sal also mentioned, and the data presented there too, it's that a lot of things just wound down. Investments slowed down. They became much harder to get in and get signed. And a lot of that, I think of in terms of just gears getting stuck, right? It wasn't just that venture decided to stop investing. It was the IPOs stopped happening, or they took longer. The M&As, the large M&As stopped happening. That kind of started even before 2021. And then the risk appetite completely just dried up, right? And we're in a very risky business. As Nathan said, it's a 7 to 10 year product development timeline. Okay. In therapeutics, you commonly hear the billion and multi-billion dollar investments into R&D to get a single drug out. A lot of failures. You gotta fail a lot in product development. Okay, but it's also at big companies. Some of them have positioned themselves very well. On the smaller end, in terms of startups, okay, in terms of startup life sciences companies in general, what have they had? So it all really just started in 2017, that big ramp up in venture funding coming across up to 2021, right after COVID, during COVID. A lot of investor money poured in, a lot of generalist investor money poured in on the public markets as well. I'm not going to touch too much on the public markets. We tend to focus more on private deal making and also with bigger pharmas. Obviously, those are public. But $44 billion came into biopharma therapeutics and platforms. This is in venture money. Okay. Stack up MedTech and HealthTech on top of that to bring us close to $90 billion coming in terms of investments. 1,200 rounds just last year. Okay. As we wound down things, close to $50 billion down from that $90 billion high point. Okay. So this year at the half year mark, the data I'll be presenting, by the way, is coming right off of last week. So everything will be timed by the end of 6:30. So at the halfway mark here, we're at $23 billion invested into the broader healthcare and life sciences space, including biopharma therapeutics, which brings in about 11.3 billion of that. When you do count in health tech and med tech, we're sitting a little bit better than the midpoint of last year. I do think that med tech is kind of saving it. The drawdowns have been steeper in biopharma therapeutics, okay, where a lot of the rounds that do get invested, there are many fewer of them, which I'll show in a slide here, the dollars that are being deployed, they're in much more advanced rounds, much more advanced companies, and obviously larger check sizes there. But on the flip side, it's to fewer companies. Okay. Over on the right, before we close off this slide, the top 11 MedTech rounds for this year so far, BVI Medical and Neuralink, some headline companies there with huge rounds, $1 billion in the BVI, 650 in a Series E for Neuralink. And work our way down here, these are all very advanced stages, except for Leela Sciences, which formed out of Flagship Pioneering, an advanced company bringing in AI tooling for drug discovery. In a lot of the slides that are focused now on MedTech, I'll be talking about device and diagnostics companies that are developing their products into their own pipelines, but also companies that offer services, much like a SaaS service or contract services to deploy their technology and their capabilities to other companies. Okay. All right. So getting into it. So I mentioned large funding rounds on the right side chart here, and also just the breakout of MedTech funding by quarter is doing okay considering everything. We're at $12.1 billion in venture funding there through 413 rounds of funding altogether. 7.1 of that was in the first quarter, and second quarter was definitely lighter. And that's echoed also not just in MedTech, but in biopharma on the other charts that we run there. Okay. Large deals, large funding rounds are happening. And so 32 of these are $100 million investments or larger, 27 more, kind of 50 million larger. And those two numbers at the half year mark are decent, especially on the large size. Okay. Large rounds are happening. But the downside of that is that those are large rounds into fewer companies. Okay. So much fewer early stage seed and Series A rounds are coming out. And it's tougher to get a biopharma and life sciences startup company off the ground nowadays, especially in the last 2 or 3 years, just because investors are focused on things that are quicker through initial R&D, closer to market, more of a sure thing, being a lot more risk averse because the exits are not as frequent. Okay. So in order to have that whole calculus work out, the exits have to happen as well as the good investments. Okay. All right. So switching gears a bit out of venture, now we're looking at partnerships and service contracts and licensing and all those that we track. And in this chart here, we're looking at health tech, SaaS contracts, acquisitions, M&A being very active. We do track licensing more so than other types of deals just because there's more to dig into there. And across the board, not just in MedTech and health tech, but licensing and R&D partnerships are down a bit this half versus H2 of last year, 324 deals there. But M&A making up for it. There's a lot of activity there, which I'll show in a couple of slides. And so companies are being acquired, just not at the largest dollar values that we used to see. Okay. And also what's making up for a lot of this is in SaaS and service contracts. So as I mentioned, there's a shift in companies that were previously developing in-house technologies for their own pipeline into more of a SaaS model where they would offer service contracts and take AI drug discovery, for example, for using that tooling and that technology across many companies, basically. Okay, so those deals are worked out a little bit differently. They're more contract driven, more kind of upfront payment driven than typical product development, licensing, and commercialization deals, which have a bit upfront, about 10 to 14% upfront, and then kind of the headline number in a total of milestones and sales milestones and royalties, basically. Okay. So to close out the half year, just over 2,000 deals altogether, $237 billion across the board, and 98 billion of that is in upfront money, and that's against 191 billion from the full year last year. Okay. So some of these big numbers, big names. On the left, we're looking at service contract deals, the big upfront dollar value deals, $230 million in a joint venture that Hologen and Mira GTX gene therapy company put in to develop Hologen Neuro AI. It's a JV focused on applying AI models to neurological diseases, all sorts of CNS diseases, basically. More on the device plays here, auto injectors and drug delivery technology. You'll see a lot of medical device deals in government contracts with the military. Both of those are DoD and Health and Human Services deals there. The radiation monitoring software, that was with the Navy from Thermo Fisher, giant company. And then on the smaller end here, Crayon with Lilly, giant pharma company, signing an AI RNA targeted therapy deal there to apply their tech to discover new therapies that way. Okay. And also a deal with DARPA from Portal Bio. Okay. Acquisitions on the large end here, Siemens acquiring Dotmatics for $5 billion. Digital twin software, which is super cool. We've seen that in other areas, not just in medtech, but in industrial production. And then more medical device plays there with Stryker, Zimmer, and McKesson, for example. Okay. So long lists like this, what we deal with all the time. We often also have to deal with non-disclosure of information. So typically companies will send out the flashy press release, but it won't have all of the financials disclosed for various reasons. We do a lot of updates forwards and backwards to dig in for more data as it becomes available through SEC filings. If companies are public or if they're going public and they're S1s, we'll be looking through there as well. All right. Both MedTech and MedTech deal making and contracts and venture funding, we tend to also look at those across technologies, technology platforms, and also therapeutic areas of focus there. In terms of venture investment, neuro and cardiovascular bringing in a ton of money, kind of a large share of investment. Obviously, those have huge needs and unmet needs, both in terms of MedTech, which there's a lot of huge applications, and also in terms of therapeutics, obviously. $4.7 billion going in there past 18 months. Into neuro, 4.4 billion, into cardiovascular, both in diagnostics and devices and such. And then oncology, which typically always leads in terms of deal making for just the sheer number of companies working in that space. Okay. On the right side, what I'm looking at is the equivalent from deal making, from contracts and licensing, but this one I'm looking at upfront cash. So think of upfront payments as your non-dilutive capital. Those are payments upfront, not driven by milestones or anything, but just at the initiation of deals typically for committed money. Okay, so oncology bringing in $288 million in the medical device space, okay, in the medtech space here. If we were looking at biopharma therapeutics, you'd probably add a zero to all these numbers where the deals are much larger upfront. So typically you'll see oncology deals, even in early stages of development and clinical development, with a median of about $50 million upfront for a clinical program or a preclinical program even. On the large end, it's not unheard of nowadays to find multiple deals with 100 million or more upfront as part of a multi-billion dollar, multi-year partnership with a large pharma company, for example. But in medtech, oncology, neuro, endocrine, for example, kind of the top three there. All right, we'll be wrapping it up here and looking at M&A activity. Okay, so another area that deal flow is still happening is in acquisitions. I think for various reasons, there are a lot of companies that are just, the time is right for them to be acquired. Let's just put it that way. The public markets have been very tough, both on medtech and biopharma companies. A lot of companies are trading below cash. Okay, so you could read up a lot about that and you could track all those companies as well. So there are a lot of M&A deals happening at very small financial figures, right? So the upfronts are down, the total values are down. Typically, some of these deals will also have contingent payments and milestone-based structures on these buyouts as well. At the top chart right here, 142 deals have happened just in this quarter alone across biopharma and medtech. $32 billion at the top end, 28.4 billion in terms of upfront commitment. The share of these deals down at the bottom here is roughly about 20% of these deals that are announced are biopharma therapeutics companies, and 80% of them are in various types of MedTech and HealthTech. So from devices, diagnostics, all the way up to health services and IT and clinical management and so forth that we track as well. Okay, so out of the close to $89 billion in this first half, 29.4 billion of that is in MedTech. And just this quarter alone, 13 billion in acquisitions. You saw a couple of those on the large end in the table that I showed a couple of slides back. Biopharma, about $19.5 billion there. So both roughly close in total. But just one thing to note is that this is 111 deals in MedTech versus 31 deals in biopharma. So the deals are much larger for biopharma, but there are many fewer of them, right? So those are things that we tend to look at. In terms of outlook and where we're headed, I think, for the rest of the year. This slide I always include at the end of my presentations, and folks ask, right, at various points of the year, there's probably a little more clarity. At the beginning of the year, there's more optimism, right? So in terms of MedTech and HealthTech, I think, as I mentioned, with what we've seen in the shift in venture funding from early stage into later stage companies, into small rounds, into much larger rounds, but fewer of them, it is just this concentration on companies that are looking more promising, more than ever, right? Going to be closer to market with whatever it is that they're developing, okay, whether it's a device or diagnostic or a therapeutic, closer to IPO or closer to an M&A exit, okay? If you go back and look at the funds that were raised in kind of the free-flowing capital period, many of those venture funds have cycles, right? They have 5, 7, 10-year cycles. And if a lot of that money didn't get invested early on, get held back, there's still a lot of dry capital to invest, but that has to get compressed into companies that will exit or hit wild success a lot sooner, okay? Much more risk averse than it was before, I think. Biopharma, so big pharma companies, biotech companies, they will be doing more SaaS type deals, more so than typical licensing type deals that we've seen for the past 50 years. You'll see deals for services, more compartmentalized contracts rather than multi-year, 5, 10, 15-year partnerships to develop a product. So it's get a tool or get a service done and kind of move on to the next thing, basically. So typical SaaS deals, which are shorter lived, but also good for the providers and the service companies because a lot of that money is committed up front. Okay. M&A will be active. I think we'll still see a lot of companies get acquired. It's just not going to be at the high dollar value in biopharma. Right now, we're sitting roughly around, like a good deal would be between $1 billion and $2 billion for the acquisition. If you looked at that 5 years ago, it was like 19 billion to 20 billion as a mega merger, basically. So 1 to 2 billion on the biopharma side will continue. Sure, we'll have a couple of larger deals coming in as well. MedTech is doing all right in terms of acquisitions. Again, there's a lot of deals that are happening. It's just that it's going to be for companies that are at smaller numbers, basically. Okay. So that's wrapping up. If folks have any questions, I think John will be sending these around, but a lot of ways to reach us. At dealforma.com is where you can go in and check out the database. It's a subscription database, and we have a platform for you to go in and search for all these different types of deals and get in a lot of detail and really dig into the nuance of deal structures, financials around all those. Okay.
Fantastic, Chris. So I assume if you are a founder who's about to sign some sort of deal, DealForma would be a great place to get a comp on what that might look like in the market. Is that right?
Yeah, we work with a lot of companies just getting formed out of academic labs, companies that are just getting those research grants, companies that are going out for funding at seed and Series A stage, basically. And we work with them and we help to build that relationship to stay with them for a long time. And we've seen a lot of clients that have gone to the second and third stage where now they're doing deals with larger companies and getting larger funding.